Are we currently seeing a bottom in California home prices? Are we expecting home prices to continue to run into the spring housing market? In today's video, we're going to look at the most recent data from the California Association of Realtors with regards to what's happening in California real estate month over month and year over year. If you're following the headlines at the moment, you see that the median house price is actually going up. We're sitting at $771,000. But at the same time, we're seeing the number of homes going into escrow and actually selling has declined. So we've got less properties selling, but yet the prices are going up. So in today's video, we're going to talk about why you're seeing this happen. We're going to talk about how long homes are staying on the market. And we're going to talk about what you need to do if you're planning on buying and or selling a property in the spring of 2022. So currently, the median home price is up 0.7% from January to a new price of $771,270. That's up 10.3% from February of 2021. So year over year, we've seen the median home price in California rise over 10%. And if any of you are out there actually following the market, you've seen home prices appreciate in many markets 15, 20, 25%. So things are moving very quickly. Homes are selling very fast, but yet the number of homes going into escrow and actually closing is going down. And why is that? Well, we've talked about it in video after video, and it's supply and demand. So our current housing market is being driven by a low supply of homes and an overwhelming number of buyers looking to buy those homes. And those buyers are looking to buy properties for many reasons. It's first-time home buyers, you've got move-up buyers, you've got move-down buyers, you've got investors, you've got hedge funds, you've got out-of-country buyers. You just have all this demand and not a lot of supply, not enough homes to meet that demand. And therefore, you have a lot of buyers looking to bid on the same properties. And in these cases, buyers are bidding above the asking price. They're competing against one another. And if you're out there in the market, you know what's happening at the moment. You're against cash offers. You're against people with high down payments. In fact, the last property I sold, we had 21 offers on that property. And not one of those buyers had less than 20% down. So you've got a lot of cash in the market. You've got people willing to do crazy things that we've never seen before and go way above the asking price. And while there's less homes actually closing escrow, the median home price is rising because people are bidding up the prices on those homes because they don't have a lot to choose from. And the number of homes selling isn't really an indication of what the market's doing at the moment, because we've seen sales decline, but yet at the same time, we see the market continue to move full steam ahead. So it's a supply and demand imbalance. And until that supply rises to meet demand or help balance it out, you're going to continue to see crazy things like this in the market. Now, this past week, we saw the Fed come out and they raised the Fed funds rate 0.25%, which was to be expected. What we would have loved to seen is them raise it 0.5%, do something to show that they really get what's happening in the market with regards to inflation and cost rising and what have you, but they didn't want to get ahead of themselves. And so they kind of put language out there in the speech that said that they would look at it closer to summer or kind of keep it in their pocket, if you will, if things continue to accelerate or costs continue to rise. And so we saw 0.25%. And the market didn't really react because that's what they were expecting. That was what was built into the market. And a lot of people believe, that 0.25% rise in the Fed funds rate is actually a 0.25% rise in interest rate. It's not. Right? The Fed funds rate is what banks borrow, from each other on a short-term basis, in theory. So the Fed funds rate doesn't directly affect interest rates. In fact, historically speaking, as the Fed starts to raise the Fed funds rate, we see interest rates actually come down. And we've done videos where we've discussed that, and I'll link to them here if you want to check out that video in more detail. But what I'm getting at here is the rise in the Fed funds rate didn't really impact interest rates. We've seen interest rates rise from the beginning of the year, somewhere around 3%, upwards of 4.25% as of today. So we've seen interest rates go up considerably. And I was one of those people that thought as interest rates rose, we would see a pullback in demand. We would see demand slow, and that would allow supply to build. I was wrong. I was wrong on a couple of different levels because I thought interest rates wouldn't reach 4%, especially this early in the year. I thought 3.75 was probably the high side for interest rates this year. We've exceeded that. And at the same time, I thought that, that rise in rates would cause demand to pull back and allow supply to build. That's not what happened. What we saw was people got scared that interest rates were going to continue rising, and they were looking at home prices, seeing home prices continue to rise. So it was panic in the market going, I don't want to miss out on super low rates. I need to buy now before I end up paying more money for that house, over time, or, in 3 or 6 months from now. In fact, if you've heard me talk in other videos, I've mentioned the cost here in Orange County where I'm located is up about 30% from this time last year because of the rise in rates and the rise in home prices. So people are scared about rising costs, which is creating this additional panic in the market, adding on top of the demand that we already had, and it's keeping supply off the market. And that's why you're seeing homes go into escrow so quickly, right? The median days on market here in California at the moment is 9 days on market. Last year, this time, it was 10 days. So it doesn't sound like a big difference, but 1 day less on the market is a huge difference. It just shows you how quickly things are moving. And Redfin came out and said that the average home was selling for 104.3%. Now, the California data actually says that it's selling 102.9%, but Redfin is saying 104.3%. And honestly, I believe the Redfin data a little bit more because I'm actually seeing it on the listings that I've had. The last 2 listings that I've sold have sold for exactly $250,000 above the asking price. And both of them were different price points. One was listed at $850,000 and sold for $1.1. The second one was priced at $1,050,000 and sold for $1.3. And so $250,000 above the asking price, one, that was 30% higher than the asking price. The second one was nearly 25% above the asking price. So again, things are moving very quickly in this market. And that's why you're seeing, 64% of homes sell above the asking price. Now, why do I bring this up? Because if you're a buyer in the current market, you need to know how to navigate it. You can't go out there expecting to make lowball offers on properties. You can't go out there expecting, hey, I'm not going to see the property this weekend. It just came on the market. I'll wait till next weekend to see it. Now, I'm not telling you need to go out and buy a home. That's not it at all. I want to inform you so that you know how to navigate it, right? If you're a home buyer out there, a serious home buyer that's looking to take advantage and buy a home this year, you need to know what the market's doing. And currently, the market is moving fast. So if you're thinking you're just going to wait for homes to reduce their prices or sit on the market and then you'll make an offer, chances are you're going to miss out. Only 13% of the homes in California had a price drop, which to me, the number actually seems high, but the reality is you don't know what that price drop was. Was it $1,000? Was it $5,000? Was it $10,000? How much was it overpriced to start with? So you've got to know the numbers in your area, know what the market's doing. If you're one of those people out there, that comments on my videos all the time and says that you're waiting for, foreclosures to come to the market, you're going to be waiting a long time, right? The average homeowner has $184,000 of tappable equity in their property. That's on top of the 20% they need to tap that equity. So there's a lot of equity in the market. Now, if you're saying you want to wait because you're not seeing the property that you like or a property in the market that you want to be in, that's a reasonable reason to wait. But if you're one of the people out there expecting big reductions in home prices, I'm not seeing it. I don't see any world in which home prices decline significantly anytime soon. You have to have supply increase. And historically speaking, anytime there's been a big reduction in home prices, it's been because there's distressed properties coming into the market. At the moment, distressed properties aren't even a piece of the puzzle, and they're not likely to be one because of the amount of equity in the system. Now, you will have some people out there that need to sell their homes because they can no longer afford the payments, coming out of forbearance or whatever the reason is. And those people are going to end up selling, but they're not going to be selling at distressed prices. They're going to be selling at market value or pretty close to it because they can. They don't need to just let the property go. They don't need to fire sell it. So if you're a home buyer out there trying to figure out and navigate what's going on, that's the market that you're dealing with. Now, I mentioned in videos before, I'm starting to get concerned with where values have gone from an affordability standpoint, I personally speaking, but at the same time, I'm seeing multiple offers on property, right? It's not just one offer driving up the price. It's 21 offers, like the example that I mentioned a moment ago. The listing I had that I just put into escrow, 21 people were looking to bid quite a bit above the asking price. And the majority of those people were looking to waive the appraisal and waive contingencies in many cases. Again, none of them had less than 20% down. So while I'm personally looking at numbers going, I don't see how this is sustainable. I don't see how people continue to do this. There's a line of people willing and able to do it, which is continuing to drive up those home prices. So at some point in the future, we are going to see a pullback in prices. It's natural for the market to have pullbacks, but I don't think you're going to see crashes. And so if you're sitting on the sidelines waiting for the pullback, just understand there's a lot of people in your position doing the same thing. So if you do see a pullback in say 10, 15%, maybe even 20% in home prices, which I don't expect, but if you did see it, there's a lot of buyers sitting on the sidelines that would love to buy into that market. So the competition is still going to be fierce. It's not like there's going to be no competition if home prices pull back. You're still going to have a lot of buyers out there looking to buy property. The millennials that we talked about, the move up, move down buyers. As more inventory comes on the market, you're going to get more people willing to sell their homes too. That's another reason that inventory is not building. As homeowners out there at the moment that are potential sellers, they're looking at the market going, why would I sell my home? I have nowhere to go. So if they saw a property that they might want to move into, there's likely to be, their home listed on the market, but they're a one-for-one trade. They're selling their home and buying another one. So it doesn't really create any new inventory, so to speak. So while I have my concerns about home affordability and home prices, the market is still moving full steam ahead. So just know if you're a buyer, you have a long-term time horizon, 5, 7, 10 years. I've mentioned in many videos, 10 years is ideal. You're able to, withstand any pullbacks, any drops in the market. Now, if you're somebody that's looking to hold short term, 2, 3 years, we're, at peak prices. It would be a little bit more concerning. If I was planning on, buying a home and only owning it for 2 years, I probably would second guess buying at the moment. I would maybe just see what the market does. But that doesn't mean that home prices don't continue to rise, and doesn't mean they can't pull back. We just don't know where they're going to pull back from. So as a home buyer, just make sure you can afford the payment, you have money in the bank, you're not stretching yourselves, and you have a longer term time horizon. And at the end of the day, you'll be happy that you bought a house. There's a reason that homeowners have a 44 times greater net worth than those of renters, and owning real estate is a key component of that 44 times greater net worth. So just make sure you're buying for the right reasons. You're not getting caught up in FOMO and doing things because other people are doing them. You're doing them for the right reasons. Now, I want to take a minute here and ask a favor. If you found any value in this content at all, hit the thumbs up and please subscribe to the channel if you want to stay updated on everything real estate related. Now, if you're a home buyer in California, or maybe you're somewhere across the country watching this video, what are you seeing in your market? If you're putting in offers on properties, what are you seeing? Are you seeing multiple offer situations? If you're putting in offers and not getting accepted, have you been told, what other offers are doing? I'd love to know because that information helps other buyers. So do me a favor, leave it in the comments below. Now, earlier in the video, I mentioned interest rates rising, but I didn't get into a lot of detail. So if you want to know my thoughts on interest rates rising and my concern for the housing market and how it's going to affect it, do me a favor, check out this video here. I dive into it in more detail. For now, I appreciate you taking the time to watch. I appreciate all the support. Hope to see you again soon. Have a great day. Bye-bye.